people love to repeat that cash is trash. I have been hearing this phrase for 50 years now. As a rule, it comes from those who end up left with nothing when the music stops. I have survived enough crashes to learn one thing. It is not the smartest investor who survives. It is the one who has money left when the panic starts. You see, everyone loves to speculate about opportunities. They dream of buying when there is blood on the streets. But when the blood finally spills, they don't have a dime left. Only theories and regrets. That is why at Berkshire we have always treated cash a little more conservatively. Some call it laziness. I call it a way to stay alive long enough to get rich. If you manage billions, or even your own small fortune, there is only one rule that never fails. Do not run out of money when the world goes mad. In the early 2000s, the Harvard Endowment tried to outsmart everyone. They took every dollar, including parents' tuition prepayments, and invested it in the market right at the peak. Then they spent the next 2 or 3 years in agony. This is what happens when intellect meets arrogance. The market doesn't care that you went to Harvard. It just waits for you to run out of money. We watched this disaster and said, "Not us." When you manage a company the size of Berkshire, you aren't playing with lunch money. You hold the savings of 1 million people in your hands, many of whom entrusted you with everything they have. I take that seriously. Warren does too. We don't want someone who bought Berkshire stock at a fair price to lose money permanently. This means we play defense first. You cannot make rational decisions when you are begging for oxygen during a crash. Cash buys you time, and time gives you the opportunity to think clearly. I have seen it again and again. When the market falls apart, everyone suddenly becomes a believer. They pray for liquidity. They pray for a second chance. I don't pray for liquidity. I prepare for it. People ask, "Charlie, aren't you missing out on profit by holding money?" Of course I am. We could have bought a bunch of securities that would have outperformed the S&P in 2020, but everyone is smart in hindsight. The future is never that clear. I would rather miss a rally than join a panic. It is not cowardice, it is rationality. The truth is that great opportunities don't appear every week. In the next 20 or 30 years, there might be only 2 or 3 moments when gold rains from the sky. Your only job is to have a bucket ready, not a thimble. But most investors don't have a bucket. They spend everything in the sunny years buying what Wall Street is selling. And when the downpour starts, they are either too poor or too scared to go outside. That is when Berkshire acts. We don't try to predict the rain. We just make sure we have dry powder when it starts. Cash is our option on future opportunities. It is our license to act. When others freeze, and believe me, when fear comes, everyone freezes. You can't raise money. You can't sell assets. You can't even think clearly. But if you have cash, you can act fast. You can buy entire companies while everyone else is still counting their losses. People think our patience is boring. Let them. Boredom leads to wealth. Excitement leads to bankruptcy. If I were given a choice between short-term treasury bills or investing the entire amount in an index fund, I would choose the index fund if I were managing only my personal nest egg. But Berkshire is not a personal account. It is a fortress. And fortresses need moats filled with liquidity. We could play big and fast tomorrow if the right call came from London or Berlin. That is the point. We save money not because we are pessimists. We save it because we are realists. I like to think of cash the way a pilot thinks of altitude. You don't need it all the time. But when something goes wrong, you'll be damn glad you have it. People say, "Charlie, money doesn't earn anything." True, but panic doesn't earn anything either. And panic costs much more. Listen, I'm not saying you should bury your money in the backyard, but if you invest every cent constantly, you're just asking for the market to teach you humility. Money gives you optionality. It is not an asset, it is a weapon. The question is, do you know when to use it? The world will give you 2 or 3 chances in a lifetime to build a fortune. If you miss them because you didn't have money, don't blame bad luck. Blame poor preparation. You cannot time the opportunity, but you can be ready for it. And readiness starts with restraint. So yes, I plead guilty to being more conservative with cash than most, but I have seen how the movie ends for the rest. They go all in, and then they go under. I would prefer to be an old man sitting quietly on a pile of cash, waiting for gold to fall from the sky. Because when that happens, I will be the one holding the bucket. I have never been impressed by credentials. I have seen geniuses destroy fortunes faster than a drunk spills a drink. Take Harvard, for example, one of the most prestigious institutions on earth. Brilliant minds, fancy models, and an army of financial experts. And yet, they managed to lose their pants. They took every last dollar, even tuition prepayments from parents, and shoved it into the market at the very peak. They didn't just dip a toe in, they dove headfirst into deep water, and the tide went out faster than they could blink. For 2 or 3 years, they lived in absolute hell. Every meeting turned into an autopsy. Every shiny spreadsheet became a tombstone. And why? Because they were too smart for their own good. They thought holding cash was for cowards. It turned out to be for survivors. The older I get, the more allergic I am to this specific disease. The I can't miss out syndrome. It is deadly. When people cannot calmly watch others make money, they stop thinking. They tell themselves, "I'll just invest everything. The market always goes up." And then one day, it doesn't. And that is exactly when they finally understand what risk really is. Let me tell you something. You cannot eat paper profits. When the tide goes out, you have either real money or real pain. There is no middle ground. That is why Warren and I manage Berkshire this way. People think we are too cautious. So be it. But our version of excessive caution saved millions of shareholders from losing real money when the world went crazy. You cannot play the hero with other people's savings. You cannot bet everything when you manage the pension funds of school teachers and small business owners. They trusted you not to chase fashion. I've been watching this movie for 70 years. The overconfident always confuse luck with genius. They win a couple of times and suddenly start thinking they are invincible. Then reality appears and takes everything back with interest. The market doesn't reward you for being smart. It rewards you for discipline. Every few decades, you see the same cycle. Optimism turns into euphoria. Euphoria becomes arrogance. Then arrogance is replaced by despair. And through all this, the person with cash is the one writing the last check. That is the lesson of Harvard. And it is not unique to Harvard. It is the story of Wall Street, Silicon Valley, and every arrogant person since the dawn of markets. You would think people learn, but they don't. Every generation believes it is special. They have new algorithms, new technologies, new risk management. They always forget the oldest rule. When you are fully invested, you are fully exposed to the blow. And that is when the financial gods remind you who is in charge. At Berkshire, we never wanted to be such fools. When we say we sleep soundly, it is not out of complacency. It is because we know we can weather any storm. Harvard couldn't. They had to sell assets in a panic, lock in losses, and explain to donors how their genius turned into a disaster. They ran out of what every investor needs most: room for maneuver. Cash gives you this space. It buys you the ability to think, wait, and act with clarity, not fear. Most investors are fine until the world changes. Then they discover they built castles out of leverage and optimism. I prefer granite and cash. The irony is that Harvard learned the lesson for a while. Then a new generation came, and the cycle began again. Because the market tests not only your intellect, it tests your memory. The trick is not to be smart once, but to stay sane always. So yes, we hold cash, not because we love missing opportunities, but because we hate bleeding out during a downturn. There is a saying I like: when others are dying of thirst, even a bucket of water seems like gold. That is what cash is. It is your bucket. Don't throw it away just because the sun is shining. When the storm breaks, you will either be the one gasping for air or the one buying assets for 50 cents on the dollar. Decide for yourself which sounds better. As for me, I always choose the bucket. I have seen people lose everything not because they were stupid, but because they were in a hurry. They wanted to get rich. They couldn't tolerate waiting. They couldn't stand boredom. And most of all, they couldn't stand sitting on cash. They call it idle money. I call it strategic patience. When markets crash, you will see how quickly idle becomes indispensable. You cannot negotiate with panic. Liquidity problems do not yield to logic. When a house is on fire, the man with water doesn't ask for permission. He names his price. That is what money does. It gives you leverage when everyone else is desperate. It allows you to behave like a reasonable adult in a room full of crying children. I have seen this room many times, in 1973, in 2008, and I promise you will see it again. Every generation faces its reckoning. Some new innovation appears. Derivatives, crypto, meme stocks. Whatever the fad, suddenly everyone is convinced that the old rules no longer apply. Then gravity returns, and cash becomes king again. Do you know who survives? The boring ones. Those who didn't overextend, who didn't borrow to speculate, who didn't equate intellect with invincibility. Warren and I have always liked boring businesses. They make money. You don't need a PowerPoint presentation to explain them, and they don't collapse the moment interest rates change. People laugh at such investing until they need a bailout. Then, prudence suddenly becomes sexy again. The truth is, money doesn't just protect your portfolio, it protects your sanity. When everyone else is panicking, you can sit calmly, look at the chaos, and ask what is actually cheap. It is impossible to do this if you are up to your ears in debt. You cannot think clearly with a gun to your head. That is what happens when you live without reserves. The world stops being an opportunity and turns into a series of emergencies. Berkshire doesn't play that game. We never want to be forced sellers. That is the greatest shame. Selling good assets just to survive a bad time. So we keep the war chest full. Not because we expect a catastrophe every morning, but because we know a catastrophe will eventually come. And when it does, we want to be the buyer, not the victim. I have said it before, in the next 30 years, there will be 2 or 3 times when it rains gold. You cannot pick the day, you cannot schedule the opportunity, but you can damn sure be ready when it comes. This readiness, this calm, comes from one thing: having money. People think we wait for miracles. No, we wait for math to make sense again. And when fear takes over, prices stop reflecting reality. That is precisely when rational people armed with liquidity write history. Most investors never look at it from this angle. They think waiting is a waste of time. They forget that compound interest works in patience too. Every year you don't blow up is a year your base gets stronger. In 1974, people thought Buffett and I were crazy. We were buying stocks when everyone else was selling their souls for cash. Why could we buy? Because we already had money. We didn't have to beg for loans. We didn't have to sell anything. We just acted. That is what money buys you. The ability to act fast when it finally matters. Not reacting, not predicting, but simply acting decisively when the odds tilt in your favor. The irony is that the same crowd that laughs at you for holding cash during bull markets will worship you when you deploy it during a crash. But by that time, they will be too broke to join you. Holding cash doesn't mean you have lost faith in capitalism. It means you have lost faith in human timing, and rightly so. Markets are not gods. They are human emotions with price tags, and human emotions don't stay rational for long. So you keep dry powder, bide your time, and when the world starts losing its mind again, you quietly write checks while everyone else writes excuses. Patience is the rarest form of intelligence. Money is a way to preserve it. If you don't know how to wait, you will always pay someone who does. And that person is the one who has liquidity. Money buys time. Time buys sanity. And sanity is what wins over a decade-long distance. You don't need 50 opportunities in a life. You need just a few. And the discipline to do nothing until they appear. Most people can't handle this. They have an itch for action. They think doing something, anything, is progress. It isn't. In investing, activity often replaces thinking. I spent my life watching people ruin themselves because they couldn't sit still. They chase every market bounce, every hot tip, every next big theme. And when the tide turns, they are shocked, as if history hadn't been screaming the same lesson at them for 100 years. In the long run, the market rewards the person with the bucket, not the thimble. Because when it rains gold, you have only a few seconds to act. If you show up unprepared, without money, without conviction, you will just stand there with your mouth open, watching the opportunity float away. That is exactly how most people experience crashes, as spectators of their own misfortune. They thought they were investors, but they were just optimists with bad timing. Warren and I don't predict the rain. We just make sure we have dry buckets ready. And when the storm hits, we don't hesitate. That is how we bought See's Candy. That is how we acquired GECO. That is how we got into railroads and energy when everyone else was terrified. We didn't do it because we were brave. We did it because we were liquid. Cash is not courage. It is preparation. It allows you to act calmly when others are paralyzed by fear. Courage cannot be bought on credit. You either have reserves or you don't. When everyone else is scrambling for capital, you will already be there, writing checks. I have said it before, and I will say it again. Money is made during crashes. You just don't know it at the moment, because when panic distorts prices, the world's best assets go on sale. But only a handful of people can buy them, and they all share one common trait: cash and patience. The rest are stuck glued to CNBC screens, listening to people who sound confident but are secretly desperate. That is the real beauty of holding cash. It gives you emotional distance. You don't have to participate in every mania. You don't have to justify every price. You can wait for the perfect pitch. And when it comes, you swing with all your might. Some people say, "Charlie, you just got lucky. You were in the right place at the right time." That is nonsense. Luck favors the prepared. The unprepared call it injustice. The prepared call it opportunity. There is nothing mystical about it. We simply refuse to spend money just to be busy. We let boredom work for us. Boredom is the tax you pay for long-term wealth. Most people cannot afford it. They want stimulation, excitement, adrenaline. They want to feel like they are doing something important. Fine. The market will give them as much excitement as they can handle, usually at the worst possible moment. Meanwhile, we will sit with our money, looking dull and slow, until suddenly we stop being that. That is the moment when prudence turns into power. When everyone else is bleeding, you become the buyer of last resort and the owner of the future. I have seen it happen again and again, in 1974, in 2008. And it will happen again before you die. Every crash seems unprecedented to those living through it. But for those of us who have seen a few, it is just another rerun. Some new headlines. But that is exactly why you need a ready bucket. Because no one rings a bell before the gold starts pouring. It just starts falling. And if you aren't ready, it is gone. And here is what most people miss. You don't need to predict when the rain will start. You only need to survive long enough to see it. If you can't do that, you will never get rich. You will just be constantly starting over. I don't care how clever your strategy is. If you can't stay solvent through the entire cycle, you aren't an investor. You are a gambler with a better vocabulary. So yes, I will sit on my money. Let the world laugh. Call me cautious. Call me old-fashioned. Because when the golden rain comes, I will be the one holding the bucket, and they will be the ones drowning in regret. The irony is that most of them will call it bad luck, but it isn't bad luck. It is discipline. And discipline is the only advantage that has no expiration date. People confuse caution with weakness. They think being careful means being timid. That is nonsense. Caution is what allows you to play the game long enough to win. I never particularly liked those who brag about their risk tolerance. They sound brave until the risk actually shows up. Then they cry for the Fed to save them. Warren and I built Berkshire to survive, not to impress. We could have used leverage, squeezed every cent, and maybe doubled our returns for a while. But we could also have lost everything. And for a while is not a time horizon I respect. Our job is not to be heroes. It is to keep the savings of 1 million people safe. This requires humility, not testosterone. I once said, "It is not greed that drives the world, but envy." Well, envy also kills investors. They see someone else making 20% while they are making 8%. And suddenly prudence feels like punishment. That is how stupidity begins. They start reaching for yield, buying junk they don't understand, telling themselves, "I'll be smart enough to get out in time." That is the oldest lie in the game. You won't get out in time. No one gets out. Markets move faster than egos. That is why defense is everything. We don't hold cash because we are afraid. We hold it because we are aware. The difference between intellect and recklessness isn't courage, it is timing. And timing isn't luck, it is liquidity. You cannot seize an opportunity if you are already drowning. Look at the Great Depression. The people who made fortunes weren't those with fancy forecasts. They were those who had cash when no one else did. They bought assets for pennies. Everyone else went broke reading newspapers. The same pattern repeats every generation. New tools, same outcome. Wall Street invents a new product, sells it as safe, and convinces everyone that this time it will be different. It is never different. So we prepare for stupidity, not only our own but others too, because human nature doesn't evolve as fast as technology. That is what most investors don't understand. You aren't competing with algorithms or analysts. You are competing with your own impulses, the urge to overreach, the fear of missing out, the inability to sit still when everyone else is celebrating. If you can't handle that, it doesn't matter how smart you are. The market will put you in your place. At Berkshire, we would rather look stupid in good times than be destroyed in bad ones. It is not fear. It is foresight. We manage the company the way we would want every shareholder to manage their life. Keep reserves, avoid leverage, and never assume the world has to be predictable. People love to say that fortune favors the bold. Well, maybe, but wealth stays with the cautious. I have seen daredevils go broke, and I have seen cautious people get rich slowly and stay rich. You can always spot the difference. The cautious sleep at night. The bold only pretend to sleep. By the way, thinking is much easier when you aren't breaking into a cold sweat over margin calls. That is why defense matters. Cash preserves your rationality when others succumb to emotion. Everyone thinks they will stay calm during a crash. They won't. Fear spreads faster than logic. It infects every decision, every conversation, every headline. That is why the decision needs to be made long before the storm starts. You don't build an ark when it is already raining. You build it while the sky is still blue, and you look crazy until it saves your life. That is exactly what Berkshire does. We build arks. We don't guess when the flood will be. We're just always ready for it. So when people ask, why hold so much money? I answer, because I like to sleep well. Because I like to have options. Because I have seen what happens to people who don't have them. Defense isn't sexy. It doesn't make headlines. But it works quietly in the background, using compound interest, protecting you from ruin, buying time, and preserving sanity. And if that sounds boring to you, great. It means you have finally started thinking soundly. People consider cash dead weight. I consider it ammunition. You carry a gun not because you plan to shoot every day. You carry it because you cannot choose when you will need it. That is how I look at cash. Not as jewelry, not as lost potential, but as stored power. Most investors treat cash as a problem to be solved. They can't stand money sitting idle. So they throw it at anything just to feel productive. This is emotional relief disguised as financial decision-making. I have never met anyone who went broke holding cash. But I have met plenty of those who went broke trying to make it work harder. Money doesn't need to work harder. You need to think smarter. People misunderstand the meaning of liquidity. It is not just having money, it is having freedom. The freedom to say no, the freedom to wait, the freedom to walk away from stupid deals. That is what money gives. The ability to ignore noise. In 1999, the world went crazy over internet stocks. We looked stupid sitting on bags of money while kids got rich in a matter of weeks. Then the bubble burst, and suddenly stupidity turned into wisdom. Nothing changed in us. The world simply remembered gravity. That is the pattern. First, they mock discipline. Then they envy it. I hold cash not because I am a pessimist. I hold it because I am an opportunist. If you want to play big, you must have dry powder when it counts. Berkshire is built exactly for this. To be able to move billions in a single day without asking anyone for permission. We can buy an entire company before the market realizes it is undervalued. Why? Because we kept the gun loaded. Meanwhile, Everyone else is looking for bullets after the fight has started. That is what people don't understand. By the time the opportunity becomes obvious, it is too late to prepare. So we prepare in advance. When it rains gold, you don't have time to borrow an umbrella. You either have one or you get soaked. I cannot tell you when the next crash will come. No one can. But I can tell you that it will come. And when it happens, cash will suddenly stop being boring and become brilliant. This transformation happens in every cycle. And yet, people forget about it every time. They think history began when they were born. They think experience is obsolete. They think leverage is genius until it stops being so. The way we manage Berkshire is simple. We don't play prediction, we play preparation. Prediction is for the ego. Preparation is for survivors. When we hold tens of billions in treasury bills, we aren't missing out. We are building a springboard for the moment others fall. That is why we can act calmly when everyone else is bleeding. We know where our next move will come from. From that pile of money, we refuse to spend foolishly. I don't wake up every morning hoping for a crash, but I don't fear it either, because I know we are armed. And when you are armed, you don't need to be nervous. You can think clearly. You can remain rational while the rest of the world suffers from hyperventilation. Money gives you this advantage, the advantage of clarity. And clarity is priceless when others are losing their minds. People think the secret of investing is in intellect. It is not. It is all about temperament, and nothing strengthens temperament like a strong balance sheet. So yes, cash might look lazy, but it is not lazy money. It is patient money. And patient money always beats desperate money. The world belongs to those who wait with money, not to those who chase with hope. Cash is not for show, it is for war. And the market, if you stay in it long enough, is always a war. You can go there armed or go with a prayer. I made my choice decades ago. There is a certain calm that comes with knowing you can survive anything. That is what money gives. Not luxury, not bragging rights, but peace of mind. I watched entire institutions collapse from stress, not because they lacked intellect, but because they lacked liquidity. The moment the markets turned, they realized how naked they really were. Liquidity is to business what oxygen is to the human body. You don't notice it when it is there, but when it disappears even for a minute, you are dead. At Berkshire, we never wanted to feel that suffocation. We would rather look slow than look desperate. You see, desperation has a smell. The market smells it. Banks smell it. And as soon as you start smelling of desperation, you stop being a player. You become prey. That is why we always manage Berkshire as if a crisis might hit tomorrow morning, because one day it will. And when that happens, we will have money to play offense while others pray for rescue. People say, "You are too conservative." I answer, "We are still here." Survival is underrated in this business. It is funny how everyone acts like they are invincible during a boom. They praise efficiency, which usually means they have eliminated any margin of safety. Then, when the tide turns, they discover that efficiency is just fragility under a layer of makeup. We prefer redundancy. We like backup plans, full tanks, and extra money. It is not sexy, but it works. I remember Warren once said, "We never want to rely on the kindness of strangers." That is why we never run out of money. We can buy what we want and when we want, without borrowing, begging, or annoying bankers. This is true freedom, and it is possible only when you hold cash. In 2008, while the financial world was burning, We were writing checks for billions of dollars. Not because we were geniuses, but because we weren't drowning. We had the ability to think clearly when others couldn't. And clarity in a crisis is worth more than any formula or forecast. The truth is, volatility doesn't scare us. Illiquidity scares us, because volatility is just noise. But illiquidity kills. That is why we hoard cash. It is not pessimism. It is insurance against stupidity, ours and everyone else's. You cannot control markets. You cannot control central banks. You can barely control yourself, but you can control your reserves. Most people learn this too late. They think they are being efficient by using every cent. Then a storm happens, and they find out what fragile really means. I like to think of Berkshire as a fortress. It is not the prettiest castle, but the walls are thick and the moat is deep. We built it to sleep peacefully while others scream. And we really do sleep very well, because sleep is a competitive advantage. It is impossible to think clearly if you aren't sleeping at 3 a.m. worrying about margin calls. You cannot make rational decisions when you are terrified of bankruptcy. Money solves this problem. It is not glamorous, but it is effective. You see, the market rewards emotional endurance, not emotional drama. It is not about who is the smartest. It is about who stays calm the longest. And calm is built on preparedness. Preparedness is built on money. We structured Berkshire around this simple truth. Stay liquid, stay dispassionate, stay sane. When the world goes crazy, and it will happen, our only job is to keep our sanity. That is why I don't envy people with high leverage or the overconfident. Today they might look rich, but they live one margin call away from humility. I would rather be old, boring, and solvent than young, famous, and bankrupt. So we will continue to hold cash. We will continue to sleep well. And when the next panic comes, which happens once in a lifetime, we will wake up early while everyone else is still in shock and go shopping. Because peace of mind is not passive. It is bought with patience, prudence, and a large amount of money. There is a difference between managing your own fortune and managing other people's savings. The first requires skill. The second requires a conscience. At Berkshire, we have both, but we never forget what is more important. You see, it is one thing to risk your own comfort. It is quite another to risk a widow's pension, a school teacher's retirement, or the life savings of a small-town doctor who trusted you. This is a weight I feel every day, and that is exactly why we manage Berkshire the way we do, with a large cushion of money, an allergy to debt, and an absolute unwillingness to gamble with eternity. If you hold our stock, you are probably not a speculator. You are someone who wants safety with intelligence, growth without madness. We have shareholders who put everything they have into Berkshire. I am not exaggerating. They bet their entire net worth on our judgment. And if you think I will risk that just to squeeze an extra 2% profit this quarter, you don't understand me at all. Our main job is not to maximize profit every year, but to minimize permanent loss forever. That is what money allows us to do. Sleep soundly, make decisions without desperation, and protect the trust of millions who depend on us. I have seen what happens when large organizations forget this. They start reporting to analysts, not shareholders. They chase quarterly figures instead of long-term sanity. And soon they turn into machines optimized for appearance, not endurance. This is not capitalism. This is vanity. I don't care how effectively we can use every dollar if it means risking the foundation of the entire structure. A skyscraper built without columns looks elegant right before it collapses. So yes, we hold cash. And no, we won't apologize for it. Because when the next crash hits, those same critics will suddenly call us prudent visionaries. It happens every time. Applause always sounds after the blood. I once told Warren, I would rather miss a small opportunity than lose a big reputation. He agreed. And this philosophy has quietly borne fruit for 60 years. People sometimes complain that Berkshire is too old-fashioned. Fine, old-fashioned built railroads, not PowerPoint presentations. Old-fashioned survived depressions, not tweets. Old-fashioned is still here. There is a moral dimension to all this that is rarely talked about. When you manage money for others, you aren't just making investments, you are making a promise. A promise that when the world turns upside down, you won't panic, you won't freeze, you won't let them down. You will hold the line, and holding the line requires money. Not cunning, not complexity, just reserves. It is that simple. If you ever want to see true ugliness, watch what happens to a brilliant fund manager. When clients start demanding withdrawals during a crash, genius evaporates. Only pathetic excuses and fire sales remain. We never had to do that, because we never bet everything. We never promised more than we could deliver. And we never forgot that our first duty is not to get rich, but to stay rich. This mindset doesn't cause excitement. It won't get you headlines, but it will bring you time, respect, and peace. The true currencies of wealth. We aren't trying to impress Wall Street. We are trying to protect Main Street because our shareholders aren't hedge funds. They are families. And families deserve guardians, not gamblers. If that makes us conservative, then find me guilty. I will gladly accept that verdict, because when the next storm hits, and it always hits, I want every Berkshire shareholder to look at the chaos outside, see the screaming news, and still feel calm enough to say, my money is with the guys who hold cash. That is what honesty in finance looks like. It is not complicated, it is just rare. You cannot talk about money without talking about psychology, because cash is not just a financial position, it is a mental position. When you hold cash, you are essentially saying, I am willing to look stupid today to be smart tomorrow. This is harder than it seems. The world doesn't reward patience, it rewards spectacles. The loudest voices always belong to the most reckless gamblers until they disappear. Every bull market births new geniuses. They all speak confidently on TV. They use words like momentum, rotation, and macroeconomic tailwinds. They sound reasonable because they confuse volatility with skill. But when the tides turn, their IQ drops faster than their portfolios. That is what I love about cash. It keeps you humble. It reminds you that you aren't as smart as you think, and that uncertainty is constant, not accidental. People always say they will be greedy when others are fearful. I have been watching them for decades. Almost no one actually does it. Because when fear appears, it doesn't knock politely. It kicks down your door and takes your confidence hostage. Money is how you buy your confidence back. When you have it, you can watch fear without becoming part of it. When you don't, you are swept away by madness like everyone else. That is why I say, the greatest return on cash isn't financial, it is psychological. It gives you independence, it gives you patience, and most importantly, it gives you the right to do nothing. This is a luxury available to few investors. Most cannot sit still. Their mind starts whispering, "You are wasting time. You are missing an opportunity. Everyone else is getting rich." This whisper destroys more wealth than recessions ever did. The ability to ignore it, to sit with discomfort and wait. That is what distinguishes investors from speculators. I have lived long enough to see all kinds of madness, from tulips to dot-coms and cryptocurrencies. Different names, same disease. The moment you start feeling like you are falling behind, you have already lost. Cash inoculates you against this disease. It prevents emotions from hijacking your judgment, because the minute you feel forced to act, you stop thinking. You start reacting. I don't react. I let the world make mistakes with its reactions, and then I calmly pick up the pieces. It is not cynicism, it is just arithmetic. Markets are designed to transfer money from the impatient to the patient. And patience without money is like a soldier without armor. It is a theory, not a strategy. Most investors burn out because they cannot handle boredom. They want action every week. They treat the market like a casino and then complain when the house wins. Berkshire doesn't gamble. We wait. We act rarely but decisively. And when we act, we bet big because we earned that right. Money gives you that right. Without it, all your opinions are just noise. There is a quiet power in knowing you don't need to fight for anything. When you don't need to act, you can think clearly. And clear thinking is the last true advantage left in investing. Everyone is looking for a secret formula, some magic algorithm that beats the market. But the formula has remained the same for 100 years. Spend less than you earn. Avoid debt. Keep money for opportunities. And never let emotions govern your decisions. It is not complicated. It is just damn hard to follow, because discipline doesn't bring pleasure in the short term. It feels like restriction, like watching others dance while you sit still. But here is the thing. They are dancing on the edge of a cliff. You are sitting on solid ground. When the music stops, you will still be standing. And they will be wondering what happened. I have made peace with looking stupid. In good times, I learned that the market laughs first and respects you later. And I can live with that, because every time the crowd panics and headlines scream about an unprecedented crash, that very cash everyone laughed at suddenly becomes the smartest asset on earth. Such is the psychology of money. It is tangible patience. It is clarity in paper form. And it is the only guarantee that you will still be thinking rationally when the world stops making sense. If you live in the markets long enough, you will realize there are only two types of investors: the prepared and the punished. Every decade or so, the world forgets this. People start saying things like, "This time it's different." It is never different. Euphoria always ends the same way. Margin calls, panic, and silence. And in that silence, those who hold money quietly begin to buy back the future. Such has been the rhythm of my entire life. Boom, bust, boredom, repeat. And every time, those who understood that cash is not a burden, but a shield, survive. I have seen fortunes made and lost due to one principle. When opportunity knocks, only the liquid can answer. The rest are just spectators. That is why we never apologize for caution. You cannot multiply capital if you are dead. And in investing, staying alive is half the battle. People love to say fortune favors the bold, but they forget that fortune also destroys the unprepared. Boldness without insurance is just arrogance with better lighting. You see, markets are built to test your temperament, not your intellect. Everyone is smart when the wind is at their back. The real test is who can keep their head when the wind changes. That is what money does for you. It keeps your head in place. It keeps you from making those desperate decisions that erase a decade of progress in one bad quarter. We have seen this movie too many times. Those who use leverage, the impatient, and the overconfident always end up learning the same expensive lesson. They laugh at you for sitting on cash. Then they cry while you buy their assets at a discount. We wish them no ill, but we simply refuse to join them. At Berkshire, our philosophy is simple. Make money slowly, avoid permanent losses, and always be ready to act when the world goes crazy. You cannot predict crashes, but you can prepare for them. This is not pessimism, it is realism. And realism, if applied long enough, becomes wisdom. Over the years, people have asked me, "Charlie, when do you think the next crash will happen?" I always give the same answer. I don't know, but when it happens, I will have money. This is the only prediction that has always been true, because markets are like the weather, unpredictable, chaotic, and humbling. But your preparation is what is entirely under your control. When you build your life or your portfolio on the assumption that the sun will shine forever, you deserve the lesson the storm will teach you. The irony is that true optimism isn't the belief that the sky will always be clear. It is the belief that you will still be standing when it stops being so. And the foundation of that optimism is cash. It is the quiet discipline that gives you strength when others panic. It is what allows you to think clearly, buy aggressively, and hold confidently when everyone else is falling apart. Most people don't understand that investing isn't genius. It is endurance. You don't win by swinging harder. You win by staying in the game longer than the fools who burned out. Money keeps you in the game. It allows you to survive every crash, profit from every recovery, and avoid the humiliation of having to sell your future just to survive your mistakes. I don't need to be the richest person in the room. I just need to be the last one solvent when the music stops, because sooner or later, the music always stops. And when that happens, the world clearly divides into two groups: those who beg for liquidity and those who write checks. I spent my life trying to be in the second group. So yes, I will continue to hold cash, not because I fear crashes, but because I welcome them. Crashes are the market's way of transferring wealth from the impulsive to the patient, from the over-leveraged to the liquid, from the hopeful to the prepared. And when that transfer happens again, and it will happen, I will be ready with a bucket in hand, while everyone else is looking for a mop. That is the game. That is the secret. That is the truth no one wants to hear. Cash is never trash, unless you don't have it at the moment it matters.